So in this video, we're going to be diving into fair value gap. So this is one key aspect that is going to allow you to kind of know the direction price is going into. Like no one knows where it's going, but it allows you to kind of anticipate that, okay, price is going to get here, it's going to pause, and it's going to go in this direction. This is a key aspect for supply and demand traders if you want to be taking high probability setups rather than just shooting your shot everywhere and hoping for the best. We're going to dive into this in as much detail as possible. And if you haven't seen the first video, then be sure to check that one out after this one, because we looked into market structure. So that way, when you combine these two together, then already you're going to be losing less trades, which means that you're keeping more of your money. So overall, those profits can start to stack. Okay, so if you've not heard of fair value gaps at all, this is what it is. So when you're on the charts, you will see that price fails, or price likes to respect wicks, in other words. So every candle has a wick and has a body, right? This is just trading 101. You have the wick, you have the body. Now the wicks have to usually align in some way, or at least touch in some way, and then price continues to kind of move in whatever direction that it wants to. That might sound confusing, but let me break it down for you. So as you can see right now, you have 3 candles. Let's start from this black one. This black candle, the next blue, and the next blue. Those 3 candles right there, we can see that all the wicks pretty much align, but for this candle, we have a top wick right here, and then we have a bottom wick right here. And for this candle before, we have a top wick right there, and then we have a bottom wick for that second candle right here. So just looking at that, you will see that there is this kind of area right here where there is no wick at all, right? There's nothing. There's this space right here. Right here, you can see there's a blue wick in between that. So that's completely filled. The gap in there has been filled, and I'll get into what a gap is but in a second. But right here, there is this area right here where there is no wicks, right? Just looking directly to the left and directly to the right, there's nothing right here. This has to be filled at some point. The idea to this is that price loves to basically test every other price. It's almost like me offering this iPhone to you at £1, £2, £3, you know, do you want to buy for £4, £5? I have to kind of go in those increments. It's basically almost against the law of trading almost, or of the chart or the market, for everything not to be offered at a particular price. So if I went from £1 straight to 50, I have to at some point, it doesn't matter when, but at some point I have to go back and offer it to you at 49, 48, 47, 46. That's the idea to it. So a good example right here, you can see that that gap has not been filled, right? There is areas right here where there is no wick. But you'll see a perfect example where this gets respected to the T. Now let's take a quick break to tell you about the sponsor of the video, Prop Firm Match. Now, are you tired of wasting hours comparing different prop firms, going on different websites, or even spending hours trying to find the best discounts available for your next prop firm challenge? Now, Prop Firm Match instantly filters through all of this. It shows you the rules and regulations. It shows you the most popular prop firms that people are actually using today. It shows you all the reviews. It shows you the ones to avoid. It shows you the ones that don't pay out. Everything you need to know all in one place. So why settle for something random when you can just pick the best prop firm for you? There's no fluff, there's no hidden rules, there's nothing to pay. Just go onto Prop Firm Match today. Link will be in the description of this video. Check them out, and I promise you, you would not regret it. So this works kind of in 3 candles, right? Or 3 candles. So if you're looking at this black one, the blue one, the blue one, you will see that there is no gap at all. This wick and this wick to the left of it, so the blue one being the subject, this middle blue one is the subject, you have this to the right of it, and this black one to the left of it. It's currently aligned, right? These wicks are touching, and that's about it. But then if you look at the next candle, so just look at it candle after candle. Now, with these being the subject, so you have candle number 1, this blue one candle number 2, and then this black one candle number 3. You will now see that there is a wick here, and there is another wick right there. But there is this area right here for this subject where there is no wick to the right of it or to the left of it. So all this means as supply and demand traders, or even any trader, right, whatever strategy you use, is that price will some point come back here and fill this gap. And this makes it even better because there is no gap below it. So this gives us the idea that price will probably come here, fill it, and then continue, because there's no gaps below it based on this swing low. So if you then look afterwards, right, price gives us a nice demand right here, disrespected the demand, but respected the fair value gap. That's key. Supply and demand is one aspect that combines with fair value gap, but fair value gaps is a bigger boss, I would say, than supply and demand in terms of how the market tends to respect things. So right here you can see disrespected the demand zone, but went to the T, filled this gap right here, literally filled it, boom. Now there is a wick to the right of it. Now you can see a wick has basically filled this space. And then price continue about its way. That's what if you backtest this, you'll see it time and time again. Time and time again. We're going to look at another example. Okay, so with this example here, this is how we combine supply and demand with fair value gap to then start taking better trades. As you can see right here, we have a demand zone. Usually we'll draw this demand zone like this. I personally start to draw it this way because I really want that fair value gap to be filled, and this helps you to also avoid fake outs. It helps you to avoid them, or at least reduce them, because price isn't gonna respect the demand and then come back to fill the fair value gap, but by then you might get stopped out. So right here we have the, we know we have a demand, but then we want to wait for the fair value gap within it to be filled. So in this case, price taps into it, respected that fair value gap precisely, didn't close in it. That's when you know they really respected it, and there's a lot of buyers right there. So you can put your stop loss pretty much below, and you can see right here, price now can do whatever you want. So in terms of hitting 1-to-1, you can pretty much hit that 1-to-1 in, 2 candles, right? Boom, right there. And literally, this is on a 3-minute time frame, so in 6 minutes you're in and out. Boom, done. 1-on-1 is hit, and then price can now do whatever it wants. You see that? Price can do whatever it wants. I'll show you another example. Let's see. So price is right now just doing its thing. Okay, so combining what we went through from the last video, where we can see market structure. Overall, this is a downtrend. But because of how fair value gap works, we're even able to quickly scalp a 1-on-1. Just a quick 1-to-1 and we're out, but now price is going about its way. Now you'll see something, right? If you look at this closely, you will see that we have a fair value gap. Let's kind of clean this part up. You will see that we have a fair value gap right here, or we at least had one. So overall, every single candle and wick are pretty much overlapping, right? Right here, overlap, wicks everywhere, everything's overlapped. There is no space where there's a gap besides right here. Right here, we'll see that there is a gap, literally right there, right? Between these 3 candles, this wick did not overlap with this wick. So, just based on that, price will need to come back and fill it at some point. It doesn't always fill it to the T. You can see this candle attempted to, it went there, filled it precisely. It filled it precisely, right? So literally came, filled that, boom, and immediately rejected, literally precisely, not even one pixel above. Rejected, but then afterwards you can see buyers continue to kick in. So what this is showing you is that price isn't always going to just fill it to the T and continue, but across this region right here, you can see they've filled it anyway. So there's no more fair value gaps to be filled in regards to this push to the upside, right? There's no more. So at some point, I'm going to anticipate that price is just going to continue downwards to follow structure, which is exactly what happened. So we fill the gap and then price just continues about its way. So for those that don't even trade supply and demand, obviously you can't. This is why you don't want a super tiny stop loss sometimes, but even if you just waited for that to be filled and then you put your entry here and you just sort of, your stop loss, give it some breathing room because you don't know where price is going to stop at. So some people put it above the previous swing high, as an example, and then you want to go for like a 1-on-1. This is even a safer bet. This is just now applying just the idea of fair value gaps. We'll fill the gap based on the swing high. So you just place your stop loss right above it and you're looking for 1 hour. So just based on that alone, you can even get 1 hour just based on that. It's just using the idea of market structure, fair value gap, just taking trades in that direction and let the chart just do its thing. It's all about that fair value gap. Price loves to fill this gap. And if it doesn't do it now, it will do it at some point down the line. But price has to go there eventually. And you can see this continues to melt. Right? And there's no gaps to be filled. And based on this trade I would take, there was no gaps to be filled, and that's about it. So if you want to play it safe in that case, right, these are things that you can do. You can see right now we have another gap that's been formed. In this case, we have this supply, and then we have a fair value gap from here. And then if we're looking closely, we currently have a fair value gap just after our supply zone, all the way to here, right? So we want that gap to be filled and want price to tap into the supply. And you can see the moment that happens, boom, filled it, price started to go about its way. So this has now been filled, and then you can have your entry right here, and then you can have your stop loss just above it, and then you're looking for 1 hour, boom, another 1 hour, just based on applying these. So when you combine everything together, it works like a charm. Supply and demand, market structure, fair value gap, these 3 things alone does wonders. So on the next video, we're going to go on to the 3rd thing, so subscribe to see that. Next, we're going to go to supply and demand itself, making sure you're taking the best zones itself, and that way you combine all 3, you're going to be killing it.